The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Singapore has long been a leader in crypto adoption, with around 25% of residents owning digital assets and widespread familiarity across the market. But recent aggressive regulation is reshaping the landscape. Licensing hurdles are rising, some firms are relocating, and investors are reassessing opportunities. This turning point raises key questions for the market. Does strict regulation strengthen Singapore's credibility and attract institutional capital, or does it risk driving talent, innovation, and investment elsewhere? Well, to find out more, I'm joined by Anthony Anzalone, who is the founder and CEO of XION. Hi, Anthony. Welcome to the show.
Hi, thank you for having me.
Thank you so much for joining us. Well, Anthony, I just want to start off. Singapore has long been a leader in crypto adoption. 25% of residents own some form of crypto, and familiarity is high. But recent aggressive regulation is, reshaping the landscape, with firms facing licensing hurdles and some relocating abroad. So how do you see Singapore's crypto market evolving under these new regulations?
Yeah, I think you're seeing a maturing of the industry. I think that it's good that we have 25% adoption rate. And I think a lot of regulation is trying to keep people safe, especially once they're already aware. So we'll see how it plays out. It's good in places like Korea where, it is very regulated, but you get some pretty good competition there versus somewhere like America, which was regulation by enforcement. So hopefully we see a nice little middle ground where you get good regulation that's very thoughtful with good participants.
Well, firms face licensing hurdles, and some projects are moving to friendlier jurisdictions, all of which have direct, market and investment implications. So from an investor's perspective here, Anthony, how does stricter regulation affect capital allocation and market sentiment in Singapore's crypto sector?
It's a great question. I think in the short run, you'll probably see a slowdown and capital going to these other friendly places like you mentioned. But I believe in the long term, once you get a good foundation and a good holding place, Singapore has always been a leader, as you said, and I think it'll continue to be a leader.
Well, that said then, could strict rules help Singapore cement credibility as a safe and regulated hub, or, risk pushing talent and innovation elsewhere?
I really do believe that it will lead to a stronger foundation. Kind of as I said, I think that in the short run, maybe you scare a little bit of talent away, but in the long term, it'll be really good for the ecosystem. And I think you'll actually get stronger builders because there's this element of safety, which a lot of people before didn't really have.
While Singapore has high crypto adoption rates, user retention and meaningful engagement may now matter more than, sheer numbers. So how does user retention influence the value and stability of crypto projects then for investors?
I think that's a very important metric that people don't actually look at enough. I think that, as the industry grows, as you mentioned earlier, it's 25%, that's still a very low number. And we need to make sure that we continue growing, continue staying. So I think that user retention, as it is with regular tech, needs to be important. And I think so long as you can get a very solid user retention rate, growth rate will skyrocket, usage will skyrocket, and we'll see some real innovation coming out of it.
Right. MAS is taking a tough stance, but regulation can also be a tool to foster trust and sustainability in the market. So how can regulation then, strike that right balance between protecting users and allowing innovation to thrive?
Yeah, and I can answer this. I'm calling from New York in America right now, but, which was a place where the last 5 years was, in the last administration it was regulation by enforcement, which means that there wasn't a lot of clarity going on. There wasn't a lot of reason. There wasn't a lot of, real explanation or anything. And it is the wrong way to do it. I think with the idea of getting clear, consistent regulation in place is really a good place to start. And then understanding what it is to get a license, what it is to pass the regulation. I think Europe is doing it well with MiCA. We were the first MiCA compliant L1, and that was a very easy process for us. We are very keen on regulation because we've been building in this industry for so long without regulation. And I think that hurts us more than it helps us because most people don't really trust crypto. And if there's a way for people to trust crypto and make it more widely acceptable, I think we should accept it.
Then how should investors think about the risk and reward trade-offs when putting capital into Singapore-based crypto ventures under this regulatory environment?
In a lot of ways, I think it'll be stronger, right?
Mm.
I think you get regulated companies, which means, the risk is lower, but the reward is probably quite the same.
Mm.
And I think that's very good. And you're starting to see this, when you get regulation, you start seeing a lot stronger projects coming out because you get a lot stronger builders coming out of universities, coming out of big companies who don't necessarily want to work in an industry that's completely illegal or taboo or, fearful. Once you get this element of trust, you get stronger builders, you get stronger projects, and at the end of the day, you get a stronger industry, I believe.
Right, looks like it's very beneficial here. But on that note, though, are there alternative markets in Asia or globally that are becoming more attractive for crypto and tokenized investments due to Singapore's tighter rules?
Hmm. I think, it's kind of ongoing, of course, right? And I think
Hmm.
we'll start to see. But if I'm being honest, Singapore has always been, a hotspot for crypto, for innovation, for tech innovation as a whole. And I don't think that this is going to change it. If anything, I truly believe that this will actually make Singapore a much stronger bet.
Mm.
Even being here in New York, most of my investors are based in Singapore, and I go to Singapore a lot. I'll be there in 3 weeks. And so, very, very exciting. And, I think it's one of the crypto capitals of the world. And, I look at this regulation as a way of cementing that, not necessarily transferring that away.
Oh, wow. Well, with that said, tokenization pilots and, blockchain projects, they could open new markets. But of course, success depends on execution, liquidity, and user experience. So, Anthony, from an investment perspective here, which types of tokenized assets, beyond Bitcoin and Ethereum are becoming attractive in Singapore as well as a region?
Yeah, I think that the altcoin market is, and I think
Mm.
that investors are starting to get a lot more sophisticated in doing the research on, which altcoins are, I guess, real. I think you look at, unfortunately, if you look at this industry, there's a lot of projects that either aren't doing much anymore or aren't going to do anything. And this comes out of the 2017 ICO bubble. But what you really are getting is a more sophisticated investor who does the research, understands what a project's vision is, outside of the altcoin market, and understands, I think, that there's more to crypto outside of DeFi, which is really, really exciting because there's this whole other playing field to be had.
Then, how does frictionless UX and market accessibility influence liquidity valuation and investor confidence in tokenized offerings?
Yeah, that's actually exactly what we work on here at Zion is, I believe that the UX of crypto is miserable, and I think the barriers to entry are extremely high. To download a wallet, to learn all the complexities, it's too much. It's like, imagine if I needed to know exactly how the internet worked in order to be able to use it. It's not conducive for actual growth of users. And in order to have a booming technology ecosystem, you need to remove all the friction because you need to be able to have a critical mass of users. And, as you said before, it's very important to have retention. So if you can get people in and get them retained, that's how you actually get a thriving ecosystem. And so, I think that you're going to see a lot of consumer aspects come about. You're going to see a lot more, media, entertainment, gaming coming out of crypto. And I think maybe less of a focus on DeFi because it's a little bit saturated.
Right. Well, I mean, investors are trying to anticipate whether Singapore will maintain its leading position or cede ground to other hubs. But as you've mentioned there, I mean, Singapore does have a possibility of coming out stronger. So, how do you see regulation shaping the next 5 years of investment flows in Singapore's crypto and tokenization markets?
I think you're going to see a much stronger institutional push. I know we've seen a very strong institutional push in Singapore, but I think it only gets stronger because what you get with regulation is you get institutions. And unfortunately or fortunately, it is a trade-off here. And I think that as you get more strict regulation, you are going to get some people who leave, but in a way that's okay, right? And I speak about this from the perspective of building in America, especially in New York. We had, I would say back in 2017, a lot of people left to try to build, but now New York is home to the strongest builders because you had something to prove. And we understood that we were building something real, we were building something long lasting, and we weren't really too worried about the regulation because we were on the right side of it. And I believe that
Definitely.
Singapore will follow a similar path where, again, it'll only attract stronger talent, it'll only attract larger investors. And I think so long as the politicians continue listening to the people and continue, making good legislation and being very clear about it, I believe that that's the path forward that really benefits everyone.
Well, before we let you go here, then, what strategies should institutional and retail investors consider when allocating capital to regulated blockchain markets here in Asia?
Yeah, I mean, definitely, I would check for global regulation, right? Check to see if they're MiCA compliant. Check to see where they're building. Check to see what they're building, right? Are the numbers real? Is the team doing interviews? Is the team real? Because I think this is, I've been in this industry for quite some time, and I've seen a lot of, rug pulls and scams, unfortunately. And I think, until we get to a day where these are mitigated, if not zero, unfortunately, everyone still needs to do their own research. And fortunately, the tools are getting easier. And, with regulation, it becomes a very clear point of, great, these projects are actually doing something. They're taking the initiative and they're getting regulated. And I think that that's a very, very solid way to start.
Some great insights from you there. Thank you so much, Anthony, for joining me today.
Thank you so much for having me. This is a great conversation.
Thank you. That was Anthony Anzalone, who is the founder and CEO of XION. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.
Money FM 89.9.